సో ఇక్కడ మనం పార్ట్ 3 డిస్కస్ చేస్తున్నాం. ఇది మన ఆర్బీఐ సర్క్యులర్స్ సెప్టెంబర్ మంత్ ఆర్బీఐ సర్క్యులర్స్ పార్ట్ 3. సో దీనిలో ఆర్బీఐ రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా హ్యాస్ ఇంట్రడ్యూస్డ్ a framework for formulation of regulations, a new framework for formulation of regulations, if we observe, like so the framework covers regulations, directions, guidelines, notifications, orders, policies, specifications and standards issued by Reserve Bank of India under the various acts, including 34 RBI Act, 1949 Banking Regulation Act, Payment and Settlement 2000 Act, and Foreign Exchange Management Act 1999, SURFACI, securitization and reconstruction of financial assets, and Enforcement of Security Interest Act 2002 and others. Under the new system, RBI will publish draft regulations on its official website, and the objectives impact analysis, where the feasible conditions are there, the global best practices and implementations in detail, then it will be presented. A minimum of 21 days, this is very important, this is the key word here we have, will be provided for the stakeholders and the general public to submit the comments. So feedback will be reviewed and RBI will publish a general response statement while issuing the final regulation. If the final regulation differs substantially from the draft, RBI may repeat the consultation process. In addition, discussion papers may be released prior to the draft regulations to encourage deeper engagement. So the framework impact analysis of the proposed regulations before they are finalized and also requires periodic review of existing regulations. And it will not apply internal administrative matters, procedural changes without substantive impact, entity specific regulations and those. However, RBI has retained a flexibility to dispense with the consultation process in the case of confidentiality, urgency and public interest. So importantly, existing regulations will remain valid even if they were issued prior to this framework, though the future amendments will need to follow the new procedures. There is one new procedures or new regulations. And have a look at this part one. India extends, a simple one, India extends a 50 million bond repayment deadline for Maldives. So $50 million bond repayment deadline given by India to this country. So the due date is 18th September. So since March 2019, the State Bank of India has been subscribing to such interest free treasury bills annually, providing emergency financial support to the government of Maldives under the government to government arrangement. The bond forms part of 200 million budget support package announced in 2019, given under the administration of the President Ibrahim Mohammed Solih, of which 50 million was repaid in January 2024. Repayment of the remaining 100 million as total $200 million. So then 50, then they should give back in different installments, like we can say. So to support their budget, then we were facilitated 200 million support package in 2019 under the administration of Solih, then the president by the time. Right now Rezu is the president, different person. As of now, only 50 repaid in 2024. The repayment of the remaining and 50 earlier paid, the remaining is $100 million has now been deferred twice. సో డిఫర్డ్ ట్వైస్, దాన్ని డేట్లు వాటిని మార్చడం కూడా జరిగింది. మేలో ఇవ్వాల్సినవి సెప్టెంబర్ దాకా టైం కూడా ఇవ్వడం జరిగింది. అడిషనల్లీ ఇండియా ఎక్స్టెండెడ్ టు 750 million కరెన్సీ స్వాప్ ఫెసిలిటీ, ఆఫ్ విచ్ 400 million ఈజ్ ఆల్రెడీ ఇన్ యూస్, వైల్ డిస్కషన్స్ కంటిన్యూ విత్ ద రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా ఫర్ ద రిమైనింగ్ 30 billion స్వాప్ ఫెసిలిటీ. So, like additionally India extended 750 million currency swap facility, 400 million already in use. Meanwhile, 14th Joint Project Monitoring Committee meeting reviewed the progress of the Greater Malay Connectivity Project, GMCP. That is a major project they are constructing in their country with the support of India. GMCP, this is important one. GMCP, that is Greater Malay Connectivity Project, including Malay Tilafushi link bridge implemented under India's line of credit and grants. So, the Maldives remains a key partner in India's neighborhood first policy and Vision Mahasagar as well, then and neighborhood first policy tag in India given enough priority to Maldives. Mahasagar stands for mutual and holistic advancement for security and growth across regions. That is a point. And moving to the next one, RBI sets a regulatory review cell advisory group. All this is related to the reviews, regulatory system and those. Then we have to focus on more and more on. So, RBI announced the creation of the regulatory review cell, RRC. Regulatory review cell, important acronym as well, important, as a permanent institutional mechanism to review its regulations systematically. It's a regulations systematically every 5 to 7 years. RBI sets up regulatory review cell. So, on effective from 1st October, regulatory review cell as a permanent institutional mechanism to review the regulations. What is the purpose of this one? Review regulations. Regulations ni ikkada evaithe regulations unnayo ante banking related ga vaatlo reviews anamata inka evana kottava add cheyala alanti vaati kosam anamata. To support this, RBI has also formed advisory group regulation. దీని కోసం AGR ని ఇంట్రడ్యూస్ చేసింది. Advisory group regulation comprising 6 industry experts and to channel the stakeholder and industry feedback into the review process, and AGR will be chaired by this RRC AGR. This AGR will be chaired by Ashutosh Kumar Singh, Managing Director of State Bank of India. Other members include TT Srinivasa Raghavan, Gautam Thakur, Shyam Srinivasan, Ravi Duvuru and NS Khannan, with the provision to cooperate additional experts as needed. So, the AGR's initial tenure is 3 years. This is for 3 years and extendable for 2 more years. So, the move follow RBI's 2025 framework for formulation of regulations, which laid down principal stakeholder consultation, impact analytics and regulation review to ensure the transparency and efficiency. That is the point. Moving to the next one, RBI hosts 35th conference of State Finance Secretaries. 35th conference of State Finance Secretaries. So, the Reserve Bank of India hosted this at Mumbai on September 18th, Journey Towards Economic Prosperity Through the Path of Fiscal Consolidation, with the theme this one, Journey Towards Economic Prosperity Through the Path of Fiscal Consolidation is the theme of RBI's 35th conference on State Finance Secretaries. So, then if you observe then special points in this address, RBI governor stressed the critical role of the fiscal discipline and then prudence in off budget borrowings, state RBI coordination to strengthen the policy implementation, key areas such as currency management, financial inclusion, unified lending interface, etc. So, they are discussing on these particular areas. The conference further reviewed issues related to the cash management, market borrowings by states, strategic for achieving fiscal consolidation, etc. That is a point. So, that is the one here we have. Next one, keynote of Rajeshwar Rao, Deputy Governor, ex-deputy governor. So, Banking Transformation Summit. So, Rajeshwar Rao, Deputy Governor of RBI, delivered the keynote address. By the time he was there, he was working, and he highlighted how Indian banking has consistently embraced the technology, and those then he explained. Measures taken by Reserve Bank of India are mentioned here, how India achieved this particular target success, and what are the programs implemented by the government to strengthen credit delivery. RBI introduced Aadhaar based KYC, central KYC registry, and then the measures taken by RBI. These are digital lending guidelines were issued, transparency, fairness and data privacy brought by RBI, and RBI promoted MSME credit through the TREDS, co-lending models, NBFCs, etc. So, more recently RBI and RBI Innovation Hub tested public tech platforms for frictionless credit, and are more recently developing the unified lending interface, integrating the land records, GSTN, etc. These are the things. And gaps in accessing, what are the gaps in accessing these particular? Despite progress, only 25% of adults in India have access to the institutional credit. 25% only institutional credit, 25%. MSME sector contributing about 30% of the GDP. That's the point. Financial inclusion index rose from 53.9 to financial inclusion index 53.9 in March 2021 to 67.0 March 2025. Financial inclusion index. How much people then have got bank account on those? So, Rao emphasized that credit must grow so that credit must grow not only in numbers but also productive areas such as MSMEs, infrastructure, informal sector, rural sector. That is the context. And artificial intelligence in banking, then if you observe, AI is emerging as a key drive of the banking transformation. So, 70% of the BFSI, banking financial services organized institutions in India, had AI strategies in for financial year 24, and surveys showed over the 3/4 banks deployed AI chatbots. What is the number? 3/4. Around 75% of the banks developed AI chatbots, initially used to back office tasks, and now AI is now being applied fraud detection, IT optimization, KYC verification, credit scoring, com processing, and then customer services, etc. That is the one here. And like that is a point here we have to focus. And multiple applications across the credit life cycle. AI has a multiple applications across the credit life cycle, credit inclusion, faster turnaround time, better credit appraisals through the behavioral analytics, customized solutions based on the borrower capacity, and those. These are multiple applications across the credit life cycle. Collaboration for a credit revolution. If you observe, banks and fintech companies are increasingly partnering in digital lending models. Risks and challenges, then if you observe, then third party dependency is a big task here. So, on external providers creating systemic vulnerables, market correlation where similar AI models. So, then these are possible risks here: third party risk, market correlation, cyber risk, model risk, data risk, legal tender, IPRs risk, intellectual property rights, and frauds and disinformation. That is a point. So, this information is not that much required. Responsible AI adoption. He called for responsible AI use, stressing safeguards. robust governance, human in loop, data quality, and investment in research and development, industry collaborations among banks, or etc. Regulatory that is the one. That is the point here we have. So, regulatory guardrails. RBI is expanding model risk management guidelines to cover all the AI driven functions guided by the principle of the proportionality, so that the adoption suits institutions of varying sales. Free AI committee report laid down 7 guiding stars for the trustworthy AI, focusing on explanatory, fairness, and accountability and resilience. That is the one. That is the point. Moving to the next one. Participation of the standalone primary dealers in non-deliverable rupee derivative markets. So, Foreign Exchange Management Act, under this one, the Foreign Exchange Management Regulations 2000, this is foreign exchange management. Risk management and interbank detailing is a master circular direction, master direction. Earlier rules, then if you observe, the authorized dealer category AD and only authorized dealer category AD category 1, banks with the international financial services centers, banking units could transact in non-deliverable derivative contracts. That is the one. The participation of the standalone primary dealers in non-deliverable rupee derivative markets, then we are looking at. So, earlier rule for this particular one is the authorized dealer category 1, banks with the international financial services center IFSC, banking units IBUs could transact in non-deliverable derivative contracts, users other AD and overseas banks. Standalone primary dealers authorized as authorized dealers category 3 and are now also eligible to transact in NDDC involving the rupee, national digital domestic currency, applicable with the immediate effect. So, these are the new decisions taken by the government, new decisions taken. Standalone primary dealers authorized. So, standalone primary dealers SPDs we call, authorized as a authorized dealer category 3 are now also eligible to transact NDDCs involving rupee, applicable with immediate effect. There is a context here. Participation of a standalone primary dealers. Standalone primary dealers ante ఇప్పుడు ఉన్న వాళ్ళని రన్ చేస్తూ మిగిలిన వాళ్ళని కొంచెం ఎడిషనల్గా ఉంచుకోవడం అనమాట, ఎడిషనల్గా ఉంచడం అనమాట, స్టాండ్ బై పెట్టుకోవడం అనమాట. దట్ ఇస్ వన్. సో NDDC stands for non-deliverable derivative contract, non-deliverable derivative contracts, NDDC, non-deliverable derivation. So, NDDC stands for non-deliverable derivatives contract. These are foreign exchange derivatives content. So, derivatives contracts often involving the rupee that are use cased instead of involving the physical or delivery currencies. That is the context here we have. So, new decision, try to remember, recall this NDDC. Amendments in master direction. So, these are not required master directions. Moving to the next one. India's external debt in the sense borrowed amount from borrowed from foreign nations. This comes under capital account. This is the point we should know. So, external debt, external commercial borrowings, external debt, all this comes under capital account. Already we discussed about capital account and current account. So, it released the data on India's external debt position as end June 2025 along with the revised data for the previous quarters. External debt stock 747.2 billion. So, then external debt stock, if you observe, like external debt stock, debt to GDP ratio, valuation effect, long term debt, short term debt, there is one. These are the key highlights. Currency compositions, like in the global market wise, currency compositions 53 point and here, like if we observe the I will drag this from this side. Yes, now this is visible. So, like currency borrowing, currency composition dollar 53.8%, Indian rupee 30.6%. What is this? Like these are like this reserves provision, debt from US dollar, then that is 53.8, Indian rupee, rupees 30.6, Japanese yen 6.6, special drawing rights, ESG special drawing rights, IMF special drawing rights, euro 3.5. These are our debt areas in general. Borrower profile, non-financial corporation, likewise then different data we have. So, likewise instrument composition, if you look at this instrument composition and instrument compositions, loans 34.8, currency and deposits 23, debt security 16.8, and this one trade credit and advances 17.7. So, debt service ratio remained stable at 6.6 of current receipts. So, same as March 2025. Debt service ratio, this is called. Okay. Sectoral deployment of a bank credit, then if you observe next one, I am moving to the next point. Sectoral bank credit of a sectoral bank credit. So, then sectoral deployment, then bank credit, then we are discussing about. Reserve Bank of India released data on sectoral deployment on August 2025 based on returns from 41 select scheduled commercial banks. So, non-food bank credit growth 9.9% year on year as on 22nd, the compared to the 13.6 of the year ago. Industry credit grew 6.65, services 10.6, agriculture and allied 7.6, and like if you observe the personal loans growth declared to 11.8%. Okay, that is a part. Then if you read this one, these conditions will be easy to understand. And constitution of the payments regulator board, payment regulator board. So, composition of the payment regulator board, if you observe with the section 3 of 2 of PSS Act, like here, like you can look at this particular one. So, members of the payment regulator board appointed, nominated under PSS Payment and Settlement Services Act 2007. Governor is the chairman for this one, deputy governor, member, executive director, secretary, and they become members. So, members of the payment regulator board consists of this one. This is a quorum. Additionally, the principal legal advisor of RBI, permanent invitee to the PRB meeting under regulation of 3/2 Payment Regulatory Board regulations. There is a context here. Moving to the next one, revised liquidity management framework. Reserve Bank of India released a report of the internal working group. So then if you observe this particular one, operating target of the weighted average call rate. So remains the operating target of the monetary policy. This is WCR is the operating target. RBI will also monitor other overnight money market segments to ensure smooth transmission. So weighted average call rate is a rate in general. The averaged rate of all interest rates. So then that is the WACR we have. The interest rate corridor, if you observe, symmetric corridor system retained. Policy repo rate is the middle of the corridor. Standing deposit 25 basis points below the repo rate. This is very important. Symmetric corridor system retained. So symmetric corridor system, symmetric corridor. Percentage wise, the gap, symmetric corridor system is a gap. Repo rate, reverse repo rate gap should be maintained. Likewise, policy repo rate middle of the corridor. Repo rate middle of the corridor. Standing deposit facility 25 basis points below repo. So SDF, standing deposit facility 25 basis points below repo rate, that is the floor value. Marginal standing facility 25 basis points above repo rate. So marginal standing facility 25 basis points above, this is below, SDF is below. That is the context. Liquidity alignment, RBI will align WACR to the repo rate by maintaining the optimum system liquidity using defined instruments. And the liquidity operations, then if you observe, 14-day variable repo rate. Market communication, RBI will provide at least 1 day advance notice for repo or reverse repo operations regarding tenor, quantum and timing. Durable liquidity management. So then this is the durable liquidity management, you can look at this one. Existing instruments like open market operations, long term VRR and forex swap auctions will continue under the revised framework. So cash reverse reserve ratio, CRR, and access for standalone primary dealers. So SBDs will have access to SDFs, standing deposit facility, overnight reverse repo, and all repo operations regardless of tenor. Simple one, we can, by reading that then we can understand. And like moving to the next one, RBI issues directions on investment by STCBs and CCBs in NABARD's shared service entity. There is a point here we have. So like state cooperative banks and central cooperative banks to invest in shared service entity, which is established by the NABARD. They will ask question like this, who established this one? SSC established by the NABARD. And this move follow RBI's regulatory approval in April 2025 for NABARD's proposal to set up an SSC for STCBs and CCBs. And then key amendments to extant instructions, then if you observe, addition of the permissible non-SLR instruments, investment limit and exemptions. So here like if you understand this particular one, this is enough, then no need to go in depth of this sections and those, not required. So like if you SSC maintained by NABARD, this is more than enough here. Moving to the next one, RBI issues directions on authentication mechanisms for digital payment transactions. Under section 10/2 of the Payment and Settlement Section Act 2007, these directions aim to strengthen the security digital payment transactions in India while providing flexibility to adopt advanced authentication technologies. So, which will affect from April 1st 2026, there is a key point here we have. RBI issues directions on authentication, like if you observe minimum 2-factor authentication, there is 2FA, dynamic authentication requirement, robustness principle, interoperability, open access, risk based approach, issuer responsibilities, cross border transactions, all these are included in this particular one. And like if you observe the repeal of the earlier directions as well, then several older circulars on exemptions and authentications have been repealed, consolidated under the new framework. That is the context here. And the next one important point, next one more, RBI issues standardized guidelines for settlement of claims of deceased depositors. Deceased depositors means చనిపోయిన depositors ఎవరైతే ఉంటారో వాళ్ళకి రిలేటెడ్గా new guidelines by RBI. Uniform guidelines for banks to settle the claims of deceased depositors, eliminating divergent practices across the institutions. The framework is designed to ensure the simplicity, transparency and quick relief. So, this is the important point we have to focus on. So, then for the accounts without a nominee, will or in uncontested cases, banks can settle the claims up to 5 lakhs for cooperative banks and 15 lakhs for the other banks, based on the following: for accounts without a nominee, and RBI mandated claim form, death certificate, verified identity, indemnity bond form, no objection certificate, then they should bring. For claims above these thresholds, banks must obtain additional documents including succession certificate, etc., XYZ. So, these are the point, and all the banks must fully implemented these procedures from March 31st 2026. There is a point. And moving to the next one, an important one, RBI fixes the WMA, Government of India, for October 2025 ways and means advances limit for the second half, that is 50,000 crores. Under this arrangement, RBI may trigger fresh flotation of market loans when the government utilises 75% of the, they utilize 75% of the limit, WMA limit. They can allow to go ahead with the market loans when the government utilizes 75%. RBI and the government also retain flexibility, revise ways and means advance limit at any point depending on the evolving market and physical conditions. So, then interest rate structure, then if you observe, then WMA rate structure is equal to the repo rate, and then overdraft is a plus 2% of the repo rate. If they want then additional amount, then if they cross 75% of the WMA, and then if they want additional amount, in that case 2% more than repo rate is charged. And these are circular related information. And one more point, RBI issues amendment directions and the draft circulars on September 30th. Reserve Bank of India has issued 7 direction circulars to amend existing regulatory mechanisms, like framework for the banks and other regulatory entities is not required. Gold related lending, capital regulations, large exposure, credit information, related one we discussed, related one already we discussed. So, then directions effective from October 1st, Reserve Bank of India interest rate advances amendment directions, this is implemented from October 1st, and Reserve Bank of India lending against gold and silver collateral, first amendment directions 2025, and which carve out extended to allow the working capital loans for any borrower using the gold as a raw material or input in a manufacturing or processing. So, this much stuff is not required at anyways. So, even then this much depth is not required. These are the directions given. So, just read once, that is more than enough. These regulation, then if you read once, that is more than enough. India's next one, I am moving to the next point. India's international investment position. In June 2025, Reserve Bank of India released data on its international investment position as at end June 2025. Net claims non-residents on India declined by $16.4 billion, standing at $312.8 billion at the end of the June 2025. So, net claims on non-resident Indians, there is a point, net claims on non-resident Indians, and this was due to the larger rise in India's residents' overseas financial assets compared with the increase in the foreign owned assets in India. There is a context, and like these statistics, then no need to get to butify or look at those. And the share debt liabilities in total external liabilities declined marginally from 54.8 to some very narrow decrement. Okay, that is the point. And the next one, RBI released a supervisory data quality index for the scheduled commercial banks. Supervisory data quality index, supervisory data quality index, SDQI, for all scheduled commercial banks. Reserve Bank of India has introduced this supervisory data quality index to measure the quality of supervisory data submitted by the scheduled commercial banks. Accuracy, completeness, timeliness and consistency is the main objectives here. Overall improvements in June month, then if you observe, then under the supervisory data quality index, the composite SDQI score for SCBs improved, this one 89.9% compared to the 89.3. So, normal, nominal narrow level improvement. Bank group wise scores, public sector banks improved from in which classification? Supervisory data quality index, data quality wise 88.8 to 90%, driven by 100% completeness and better timeliness. Private sector banks increased from 89.6 to 90, and foreign banks 89.1 to 89.7. Small finance banks is the highest one, 90.6 to 90.7. They may ask this one. In which category? RBI releases supervisory data quality index for the scheduled commercial banks. In that category, small finance banks highest scores among the groups, improving slightly from this particular sustaining their lead in the timelines. That is the context here we have. And the parameter trends, if you observe, accuracy, completeness is not required. They won't ask this one, not required. And the coverage of DDIs, not required, these as well not required. Interpretation of scores less than 70 major concerns, 70 to 80 needs improvement, 80 to 90 acceptable, more than 90 good concerns. Okay, that is one. Reserve Bank of India, next one, releases the data on lending and deposits, deposit rates. Already we come across this one. Next one, RBI bulletin. RBI bulletin September 2025. Reserve Bank of India released the September 2025 edition of its monthly bulletin, which includes one speech, 7 analytics articles, and current statistics. Articles in bulletin: state of the economy, US trade tariffs then affected our country's domestic system. India showed resilience with the 5-quarter high GDP growth. India showed a resilience with the 5-quarter high GDP growth in the first quarter. So, inflation, CPI headline inflation edged up but stayed below target of 7. Liquidity, surplus liquidity, equity markets were volatile. So, these are the general conditions. And flow of the financial resources, commercial sector, and the untold story of the fintech customers experience, review of the non-banking financial companies sector, NBFC role in credit intermediation is rising, impact of the UPI on cash demand, it is increased, and the consumption of the inequality declining, consumption of the inequality. So, infrastructure, an engine of India's growth express, absolutely correct one. And like These are the areas like India's growth express. These are the areas. Moving to the next one, RBI imposes 31.80 lakh penalty on Indian Overseas Bank. So, an order dated on September 29th imposed a monetary penalty on Indian Overseas Bank for non-compliance with the certain directions of the priority sector lending PSL targets, not reaching the PSL targets. So, under sections 47A 1C 4I 51(1) the Banking Regulation Act 1949, then these actions was taken by Reserve Bank of India. There is one. And next one, Shri Sirish Chandra Murmu appointed as a Deputy Governor of RBI in place of Rajeshwar Rao. He joined Deputy Governor of Reserve Bank of India. Okay, Murmu. This is the one. This is the point. And moving to the next one, RBI permits standalone primary dealer participate in Rupee NDDCs. So, then you have to know something about NDDC. So, non-deliverable derivative contracts involving Indian Rupee as per the notification issued on the Monday. The move is a part of the efforts to broaden the participation in the offshore Rupee derivatives market and strengthen risk management practices. There is a context here we have. So, then if you know this particular one, that is more than enough. NDDC, then you will get to understand. Then we will in depth of this, then derivatives market and those we will discuss soon. Moving to the next one, the government to route 5 lakh crore CSS funds through RBI's PART platform from November. So, Reserve Bank of India under the PART platform single nodal agency model, then this reform replaces the existing system where the funds are first transferred to the state treasuries, which often leads to delays and fund accumulations. Under the new just-in-time system, refunds will be credited directly to the SNA accounts maintained with the RBI, eliminating the existing 1 to 1.5 lakh crore fund float. That is the advancement. This will save center around 6,000 crore annually in interest costs on those. That is the point. Okay. Moving to the next one, RBI announced 6.82 interest rate on Government of India floating rate bond 2033. So, duration 2033, rate of interest is 6.82%. Interest rate, this is interest rate, is a tenure. Okay, period from September 2025 to March 21st, 2026 will be, this is a 6.82 per annum. That is a context. If who buys this in between these particular due dates, then the rate of interest will be that. And moving to the next one, RBI recognizes Fintech Association for Consumer Environment FACE as the first SRO for Fintech sector. First SRO. SROs then generally like the self-regulatory organization for the Fintech sector. For Fintech sector, this is the first one. FACE is the first one. Fintech Association for Consumer Environment as a first SRO for the Fintech sector. Moving to the next one, government finalizes the borrowing program, the 25-26 borrowing program. It is going to get borrow around second half financial year. Government plans to borrow 6.7 lakh crore. H2 in the sense second half of the year. So, through dated securities, which includes 10,000 crore via sovereign gold bonds, the program will completed through the 25 weekly auctions. So, then borrowing maturity shares like these are not required, then they won't ask in exam. You have to know, that's it. And then ways means advances we discussed to manage the temporary mismatches in the government payments and receipts RBI can fund to the state and central government. The limit is 50,000 crores. Already we discussed this one, 50,000 crores. Next one. Already we discussed this PSS. Unclaimed we discussed. Drive settlement, unclaimed deposits we discussed. Yes. These are the areas we have. So, let me give a word about this particular one. RBI launches a nationwide drive to settle unclaimed deposits. Unclaimed. సో ఎవరైతే క్లెయిమ్ చేసుకోలేదో డిపాజిట్స్ వాటిని క్లియర్ చేయడానికి నేషన్ వైడ్ డ్రైవ్ని ఇంట్రడ్యూస్ చేసింది. రిజర్వ్ బ్యాంక్ ఆఫ్ ఇండియా హ్యాస్ డైరెక్టెడ్ ఆల్ ద బ్యాంక్స్ టు ఎక్స్పిడైట్ సెటిల్మెంట్ ఆఫ్ ద అన్క్లెయిమ్డ్ డిపాజిట్స్, dividends, interest warrants, pensions and similar funds over the next 3 months, October, December 2025, to reduce the idle funds in the banking system. Unclaimed deposits are the balances saving or current accounts not operated for 10 years. This is the important point for us. Or term deposits not claimed within 10 years of the maturity. These amounts are transferred by the banks to the Deposits Education and Awareness, DEAF, that is Deposit Education Awareness Fund, maintained by RBI. As of March 2024, unclaimed deposits stood at 78,213 crore, marking 26% year-on-year rise. To address this, then the Reserve Bank of India will conduct district level week-long joint camps across the country, beginning with the first camp in Gujarat, first week of the October. State level bankers committee they introduced and Udgam portal, unclaimed deposits gateway to the access information, Udgam. So unclaimed deposits gateway to the access information, which allows the individuals to search unclaimed deposits across the multiple banks online. There's a context here, possible context. So Udgam portal, you can look at this particular one, RBI centralized platform for unclaimed deposits, centralized platform, okay, Udgam portal. So Udgam stands for unclaimed deposits gateway to the access information. So March 2024, total 30 banks are a part of the portal, covering 90% of the unclaimed deposits, and it's working. Then the concept is working, that is a point we should understand. And then for individuals, the search require name of the account holder, bank name. By using this we can hold, and if none of these details are available, the users can also search using the address of the account holder or a entity. There is a context. So then the portal only helps the searching unclaimed deposits and provides information on the claim process of the respective bank, and the actual settlement of the claim must be made directly with the bank. That's a very important point. They must do with the bank, otherwise then it won't give the information. Each unclaimed deposit assigned unclaimed deposit reference number generated through the bank's core banking solutions. This ensures the privacy, prevents identification of the account holders by third parties and enables the seamless claim settlement by the bank branches. So then these are the RBI related circulars for the month of September. So in these particular 3 part 1 RBI circulars, part 2 RBI circulars and part 3 RBI circulars we discussed under September 2025. It's a very short period of time, like go through all these parts so that then you can find additional points. You may get the write up, no doubt, the PDF will be given, but like if you listen the class, then simply then what are the areas you have to focus and what are the things then you have to eliminate, 100% you will get to understand. Okay, thank you and all the best. Thank you.